G'day. Yes, my name is George. I've got another message of hope, freshly baked just for you. Alright, well, the word in the headline that stopped me wasn't billion. I'll get to that. It was actually the word loyalty. You see, a news article this week titled, "Credit card loyalty costs Australians 1.6 billion a year in interest." I understand that headline, but that word loyalty, it's just coming back to me. I don't know, maybe because I did a video about credit cards about a fortnight ago or more. Hey, maybe they even read my video and that's why they did the story. Who knows? Alright, well, loyalty, as for staying with the same credit card company, is a virtue worth protecting. Is it? As for the institution charging you 19 or even 20% on your outstanding balance, it has somehow earned something from you. Did it earn your faithfulness and your continued custom, your reluctance to look elsewhere? I'm not sure if I remember if I told you, but about 6 months ago I switched my internet provider. And I've been with that same company for over 5 years. Now, they weren't a terrible service company. I thought they were fine. But the deal elsewhere was genuinely better. Marginally, meaningfully better, because I was saving money. And I'm all about saving money, of course. And so, yeah, naturally I made the move. Now, it was nerve-wracking on the first day because I wasn't 100% sure that the transition would go smooth. Because, you know, sometimes when they say, yes, it's going to come around 10 o'clock, doesn't happen, and you know you're going to need reliability on your internet to do your work, right? But I'm happy to say it all went well. Good for you, George. Okay. But also made me pause, because a commercial arrangement with a telco, we'll call it, is not a friendship. No. Yes, they know my name, but they don't know my family, right? What they know is my direct debit and my contract end date. That's it. Because the moment I stopped being commercially convenient to them, well, their loyalty to me would evaporate without a word. Hey, it's just business, isn't it? It's not a personal relationship, so I shouldn't have any bad feelings about it. Yes, so that's why I switched, and the money I saved went somewhere useful. Now, from my time as a mortgage broker, I had to go through people's bank statements because this was part of the due diligence in applying a loan for them. And I saw something that surprised me the first time. Yeah, and sometimes I think about it, it still surprised me. A credit card can feel like convenience, doesn't it? There's another train going by. It's convenient, especially when you're not using much of it. Now, you might have a car with a $20,000 limit. However, you only spend $1,000. Okay? Yeah, it's comfortable, it's manageable. Yeah, you can say it's under control. But however, you got to understand this is what the lender sees. Because when the bank runs your serviceability, when they calculate how much they can lend you, they factor in the full $20,000 limit, not the $1,000 that you used. Okay? It's the full limit. Because as far as the bank is concerned, you could draw down the entire amount tomorrow, next week. And the price they price your risk accordingly. That's how it works, guys. Now imagine doing that across multiple cards that you're juggling with. Not only does juggling credit cards affect your credit score negatively, it can make a difference between a pass and a failure on a serviceability calculator. It could mean a loan decline exactly at the moment when you need it to be approved. Right? That would be devastating. Imagine all the hard work you put in the paper, collecting all the documents, do your calculations, and you find out the bank put a big reject stamp on your document. The house you saved for, all the deposit, all the hard work, meant nothing. Even the refinance that you have saved, will save you hundreds a month. Gone. Not because what you spent on the car, but because of a limit you've never used. And that's when a credit card stops being convenient and becomes a stumbling block. I've said this many times, but I'm going to say it. Proverbs 22nd, verse 7. The rich rules over the poor, and the borrower is the slave of the lender. Now, a couple of videos back, someone commented that I was all for slavery. I'm not sure how I gave that impression. I'm sorry if I did. But it was all in the context of financial slavery. That's what I was talking about. So I just want to clear that up. Okay. So back to what I was saying, the borrower is the slave of the lender. Is not a valued customer, not a loyal program member, a slave. And here's the thing about slavery that credit card companies understand better than most of their customers. You don't have to be visibly struggling for it to be true. That chain, invisible chain, can be long and comfortable and barely noticeable around your neck when you have got this credit card debt. That $1.6 billion is the collective price of Australians staying put because moving felt like too much effort. Moving to a different card I'm talking about. The research, comparison, the fine print, I understand. None of that is enjoyable. Again, I understand it completely why that would put people off, because there's a lot of work. But there's a difference between a considered decision to stay and a quiet drift of never quite getting around to it. I talk about a lot of drift in my video. So this is one example. Now, if you do decide to switch, do it carefully. The reason I say that is because transfer fees can quietly swallow the savings. If you haven't done the maths first, read everything, confirm the numbers, that they actually work before you sign anything. So the article I mentioned before, if found that switching to cards charging around 10% or less could cut national credit card interest roughly in half. That's a lot of moolah. However, it does warn, but a bad switch can cost more than staying put. So again, I implore you, do your homework properly. Okay, so have a think about this, right? If that credit card limit, the limit, not what you've spent, is what the bank sees, is standing between you and a home loan approval, or between you and a financial freedom, especially to give generously, or between you and serving God without a debt taking is cut off your income first, is that loyalty worth keeping? My friends, the company charging you 20% or more isn't loyal to you. Cancel the cards if you need to, lower the limits on the ones you do, and keep only what genuinely serves you. So it's not simply been, not what's simply been sitting there so long it feels permanent. You can't change. I said it again. The borrower is the slave of the lender. Yeah? And I think the slave who does the homework, he can cut the chains and walks away. That's not disloyalty. So, my advice, control the credit card and do not let it control you. That's good wisdom from our good God. Alright, thank you for joining me. Again, don't forget to like the video, subscribe to the channel, and share the video far and wide. I'll see you on the next one. Cheers.